One other interesting aspect to this whole thing is how much companies in China have moved into Africa. It's
That's been happening for the last 12 months or so, or even longer.
Even longer.
Yeah.
And so it's an interesting aspect that we're looking at is possibly entering Africa through the Chinese companies listed in China. So that's another interesting wrinkle.
Is that the safer way to do it? I mean, you know, because of the risk with China is, of course, transparency, and I'd say that's probably a similar case in Africa.
Well, if you say that the trade relations between the U.S. and China are not going to get better, then you want to get companies in China that have good trade relations with Africa.
Other people.
So maybe look at some of these companies that have been expanding into Africa. So this is just a thought. We haven't gone into it in great detail yet, but this is a thought that I think is important to reach, because if you look at the expansion of China into Africa, it's been very significant.
Is it easier to get into Africa via China rather than directly into Africa?
Well, we're looking at liquidity. See, the problem is liquidity in Africa. You go to see companies in Africa, they're trading 100,000, 200,000 a day. There's no way you can get enough volume. But if you have a big Chinese company that's listed in China with liquidity, then that's a way to get in. So this is something we're looking at.
I mean, so this has been happening for quite a while now. Basically, China trying to secure its supply chain for a whole bunch of stuff, including food, ag, commodities, minerals, for their future, right? So there's that going on. A lot of Chinese companies involved in development, in construction, whether it's housing factories or football stadiums, right?
Silk Road.
Are those the areas, the Chinese companies that are involved in those two spaces?
That's one area that's interesting, particularly suppliers of equipment and suppliers of goods and services to these infrastructure projects. But we've got to be careful, because a lot of these projects are not going to be earning any money. I mean, they're been built on the basis of low-cost loans that may never
may not get paid, is what you're saying?
May not be paid back. I mean, but the Chinese strategy is to enter these countries on that basis. I mean, it's been done before. As you know, there have been loans from the U.S. and other countries that have done the same thing. These low-cost loans that, you know, in very good terms that maybe will not be paid back. But the good news is that a lot of this infrastructure is being built and has been built in countries all over Africa by the Chinese, and that really helps these economies they go forward. So it's a good development.
The risk is that China pulls out, isn't it? You know,
I don't see that happening.
No.
Because you must remember, a lot of people think of China seeing Africa as a source of raw materials.
Yeah.
That's one aspect. The other aspect, don't forget, it's about 1 billion people.
It's a market.
It's a big market.
Yeah.
Thirdly, how about labor? I mean, the Africans are just as hardworking as anybody else. It's just a matter of organizing. And you're going to see a lot of factories moving from China into some of these African countries.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to the channel for more. Thanks for watching.